One, you should always look at the size of opportunity. Like if a company is either coming up with IPO or you are buying it from the secondary market, you have to look at the size of opportunity. How big is the size of opportunity?
The market size.
Market size or target addressable market, what we call in the private space is TAM.
Hello and welcome to Market Pillars Uncovered, the educational series where we bring you powerful insights from leaders shaping India's financial ecosystem. Today we're joined by a young and inspiring market pillar, Mr. Swapnilsagar Vithalani, co-founder and Director of Cumulative Capital, which is a SEBI-registered Category 1 merchant banker. The company offers a complete suite of merchant banking and corporate advisory services, ensuring businesses have the right financial support at every stage of their growth journey. In this episode, we'll discuss micro and small caps, the SME potential, outlook for the Indian economy, and uncover 3 high-growth industries for the future. Hi, Swapnilsagar. Thank you so much for joining us on Money TV today.
Thank you very much for inviting me, Karunya. Excited to be a part of on Money TV.
And we're excited to hear all your insights on the market, micros and macros. So let me start with the latter. How do you see the economy shaping up in the next 5 years? By 2030, where do you think we're headed?
So by 2030, we'll be a significant or rather serious player in the global supply chain. Generally, economy is grown in 3 phases: trading, manufacturing, and services. So we had started with trading, but we skipped a little bit of manufacturing and started focusing on services. Now again with Mr. Modi's vision to be a part of manufacturing hub global, now we are covering the manufacturing. So first time we are seeing the capex, credit and consumption moving hand in hand. And the growth is coming from tier 2, tier 3, tier 4 cities where actual SMEs are building up the economy.
So while you're saying that we're bound to grow significantly by 2030 and will be a rather more serious player in the market, typically there are 2 or 3 levers or drivers of this kind of phenomenal growth that we're expecting. What are the industries or sectors do you think will be running the show, so to say?
So obviously on the larger macro front, infrastructure, renewables and technology are going to be the forefronts. But we prefer to look at the second order derivative, wherein infrastructure we look at allied services. Obviously road, bridges, dams will be built, but the ancillary sectors who are supporting that, like cement, steel, building material solutions, right? In terms of renewable, we say that we are growing in renewable, but as of today most of our power consumption or EV foray is coming from the thermal side of it or coal side of it. So to be on the renewable side, we look at more of solar, this IPP, second order derivative like EPC player in solar, companies putting up the power plants, independent power producers and supplying it to, because all the state electricities are not sufficient right now. And the third is technology. We see that digital transformation, right, that is really happening across the size and scale of the industry, which are working as an enabler. So we look at these 3 sectors which we believe are going to be the forefronts in the growth.
But what are the factors that are driving your conviction? Any data or any facts that you're looking at right now which make these 3 sectors? One is infra ancillary, the other being solar and renewables backed, and the third being digital.
I'll give you little anecdote or counter this thing to guide you on the infra ancillary. So for example, we have grown, we have been building ourselves, right, in terms of industries, plants, buildings, so on and so forth. So till date, we were not focusing more on the, what you can say, glass journeys, right? So now all the buildings that you see, we are copying it from or probably inspiring it from the west side. Now entire new set of buildings that are coming up are being built on the glass facades and all. Everyone wants to be more, what you can say, luxury, premium and all. So all the infrastructure services related to, let's say earlier, the growth of laminates or probably the building material solutions that are there, like earlier the fire extinguisher was not compulsory everywhere. Now the government is focusing on safety. So all HVACs, all building material related sectors are growing up. In terms of renewable, we are seeing solar and wind coming up. And on the technology front, we are seeing the digital transformation happening across. So earlier, people used to work on, let's say, accounting software, work on Tally, something like that. Or, for example, Excel, Microsoft Excel, PowerPoint are the basic digital tools that were used. Now, with the help of AI, technology and all, we are seeing that companies are really transforming their accounting systems, their controls, lending of balance sheets, credit, everything is going hand in hand in terms of technology as a enabler. I would not say that we'll see a scenario where technology is taking over humans, but yeah, if you use it as an enabler, it can help you exponentially grow.
So premiumization is the larger trend here.
Larger trend that we are seeing. Because affordability is increasing, right? Everyone wants to have their life better, upgrade, right?
Perfect. Where do you see in this entire gamut of things, the way the market is shaping, the economy is shaping, what part are SMEs or micro organizations playing here? Because at the end of the day, they are the future, and some of them will be tomorrow's nifties and the large caps as well. So we have to identify them now. So what role do you see this segment play in the future of our economy and our markets?
So we believe, let's say, SMEs has always been the backbone of any economy that is growing, right? So you see the larger player, but there is, let's say, if you see automobile manufacturer, right? There are hundreds of players who are supplying parts, who are supplying services, so on and so forth. So all these SMEs, so as of today, almost about 63 million SMEs are there, of which about 1.5 to 2 lakh SMEs will be growing exponentially, and of which about 20,000 to 30,000 or 40,000 probably SMEs that will be able to raise capital. Obviously, first round of capital that you raise it from debt, friends and family, and when the growth is required, right, you raise it from the equity capital market.
Right.
And the third phase is we are seeing in a decade's time about 5,000 to 7,000 SMEs getting listed. So if I give you little data points about when the SME market started picking up in 2012, I was part of probably second or third company that got listed on BSE SME Stock Exchange. In 2012, about 14 companies got listed. And last year, we closed at about 240 companies getting listed. And this year, we are targeting to be about 275. So almost one per day of the working days that you can see.
You identified so many sectors for our viewers. Now, when you're bullish on an industry, is it the small and mid caps that you're primarily focusing on as the future leaders, or are large caps more dominant?
So, considering the background and the experience that I've always been part of small and mid cap companies, hand-holding the promoters, helping. So, we love 0 to 1 journeys. So, when the promoter is establishing themselves, helping them scale, grow, we are not only helping them raise capital, but we try and help in the business and other parts of the business segments as well. So I have almost spent my entire journey across small and mid cap, and we see that small and mid caps will be going to be the larger part of the growth engine. Obviously, large caps would be there, and practically I find it difficult to understand. Let's say if I have to evaluate, let's say Reliance Industries. I will not be able to evaluate the entire business model because there is oil and gas, there is telecom, there is AI, so on and so forth. But for small and mid-cap companies where the growth is going to be there. So, for example, Reliance may not be able to double their growth because of the size and scale, but the small and mid-cap company can keep on growing at, let's say, 50 to 100% year on year. And where we love to play the role in terms of helping them grow. By getting them the business, by getting them the capital, so on and so forth.
Talking about that, would you like to tell our viewers about some services that Cumulative Capital offers?
So we are a SEBI registered category 1 merchant banker. So we help companies raise capital predominantly on the equity side. We do corporate advisories in terms of M&A. So we do SME IPOs, main board IPOs, QIP, preferential allotment. All to do with equity capital raising, we try and help. Cumulative Capital is built on 3 T's: team, talent, technology and trust. So we believe that we are going to be the first tech-led merchant banker, because I and Priyesh, my co-founder, started this company. I come from the capital market side of it. Priyesh is more of the early stage or private side of the experience. So we are combining those two and guiding the company. So we believe that technology is going to be the great enabler. So all the due diligence, documentation, as technology is playing a larger role in the entire economy, the world is getting smaller and smaller. So let's say earlier, when we used to do due diligence, we have to go through multiple paper trails. Now, because of the technology, that is becoming easy. Let's say instead of verifying a promoter's KYC, putting up the PAN card, Aadhaar card, verifying whether there are names are correct or not, we can do a simple penny drop, which can give us the data of the entire KYC of the promoter's bank account and other details, obviously after taking their permissions and all, because anyways they have to give their data to us for the due diligence and verification whenever we are doing the capital raise.
So clearly you have a pulse of what is going on in the SME segment. So tell us about the future growth outlook. How is the segment poised to grow? And if you could also identify some strong subsectors within the SME space also, if our viewers or investors are interested in exploring that.
So on the SME side, obviously we are sector agnostic. We are not a sector specific where we try and help the companies. But considering the same theme in terms of infrastructure, allied services, technology and renewables, we are considering it to be a hot sectors right now. Obviously, anything to do with AI picks up the space. But yeah, we have to, and we probably would love to work with founders who are more traditional. So everyone is seeing the fancy flamboyant founders, right? We try and work with the Bharat side of the founders, where they are building the businesses grounds up. And in terms of traditional businesses, so all the VC PE space was earlier looking at tech-led founders, right? Like 10 minutes delivery, working on the AI, social network, so on and so forth. We are trying to work more with the traditional business, because for us, we believe that return of capital is more important than return on capital.
That's an interesting point. But of course, when one wants to invest in SME companies, there is limited literature available, limited coverage online and in the media. Of course, you always have the annual reports. But for a lay investor, if I today want to put some money in these up and coming companies, what are some parameters I need to carefully look at before selecting, okay, this company looks promising? So how do I decide that?
So 2-3 factors. Obviously, we can't guide you in terms of buying and selling of stock, because we are not registered to do that.
But some common themes or parameters.
Themes or parameters where one, you should always look at the size of opportunity. Like if a company is either coming up with IPO or you are buying it from the secondary market, you have to look at the size of opportunity. How big is the size of opportunity?
The market size.
Market size. Or target addressable market, what we call in the private space is TAM. Other is promoters' integrity or capabilities to deliver.
But how can a lay investor find out?
So that obviously if you read annual reports and management commentaries on the annual report, there is a section in management discussion and analysis, right? If you go through, obviously it's a 100-page annual report, you need not read from the first page to last. Business outlook in terms of what they are growing, what type of businesses they are into, how many related party transactions are there. So you will see the intent or integrity of the promoter in terms of business sense. Many a times we see that there are smaller non-compliances on the statutory dues and all.
Right.
But we say that obviously as a founder or promoter, he has to decide whether to do business or to do compliance, right? So all SMEs have been growing or getting their, sleeves folded in terms of compliance and all. But in terms of business parallels, you will be able to, once you either hear the promoter or try and meet the promoter, if it is in the vicinity where you are there or you are traveling, try and meet because you will be able to get the best out of any sector by talking to a promoter, then reading out the literatures that are available, right?
Sure. And so what's the third point to keep in mind?
Third point, obviously, balance sheet talks more than the P&L. So you have to look at obviously P&L margins and all everyone looks at, but you have to see from the balance sheet side as well as to how things are shaping up in the balance sheet. Because devil is always in the detail.
Sure. Yeah.
So if you see last 2-3 years annual report and how the balance sheet is shaping up, then the P&L, you will be able to figure out the right. And I would always say that while you are looking to invest, right? Obviously, small and medium enterprises, more higher the risk, higher the return kind of scenario. Where if you invest in the large cap companies, the more mature, stable cash flows. Where in the SME space, it is growing. So sometimes they may not grow as you have envisaged. So I would always suggest to have a basket approach. Invest in, let's say, 5 to 10 companies. Let's say you want to invest 100 rupees. So invest in 10 companies, start with 50% of your investment. Let's say invest 5 in, and then if the prices goes down and you still have the conviction, you can double down on the opportunity. Look at more from the business side of it, not the price action point of view, is the thoughts.
Talking about that, we've seen a lot of investors sort of exiting the company or the stock within the very first week after listing in SMEs that I'm talking about. There are also cases when people don't seem to be entering at the right time. Of course, timing that is almost impossible. But what, according to you, is a good time or a good strategy to enter and exit an SME stock?
Again, due to regulatory, we can't say, obviously, timing the market is going to be impossible.
Right.
What we see that if you are really a long-term investor, right, you consider this asset class vis-a-vis the real estate. Let's say if you invest in real estate, now financialization of saving is happening, right? If you invest in real estate, either a flat or land, right, you're not going to see the prices every day, right? Let's say if you are investing in an under construction property, let's say in any of the suburbs in Bombay, you're not going to see how much the construction has been completed, what has been the price today. Just because you have liberty to see the price, you don't get your emotions build up on that. So we'll always suggest that don't let the froth settle, right? If you are really a long-term investor and you don't get the allocation in the IPO, because it's a lottery system. After it subscribes more than one time, right? Obviously, there is not going to be a preferred allocation to anyone. Many times people have myth that there is a preferred allocation in the IPO. There is a regulatory process that is being followed, and let's say unfortunately didn't get the allocation in an IPO. Then you should wait for some froths to settle. Let's say after 2 months, 3 months, see the first half or first quarter's result, and then decide. Because obviously everything you'll be able to realize once the dust,
exuberance dies down.
Exuberance, or the dust settles in terms of froth which is there. Because many a times what happens is that companies coming at a very reasonable multiple, and everyone wants to embark on the journey because everything is good and bad at a price, right?
We've heard so many instances of ace market investors who have identified many of these big, large companies when they were very young, when they used to be small caps and mid caps at one point. Now, obviously, these are some success stories that everyone in the market today knows that, yesterday it was a small cap, mid cap, and today it's, as big as Infosys, as big as SBI, etc. Now, if one wants to identify these true gems in the market, now these investors are equipped, they have the knowledge, but they also at some point would have started their journey somewhere. So what is the parameters, or what is the knack for identifying these jewels or these gems or diamonds in the market before they blow up and become common to the full public? You want to be the first mover, right?
I would say you have to keep your ears and eyes open, and obviously everyone would want to talk about the success stories, right? Be it any ace investors, or let's say somebody has found out a multi-bagger. But there are obviously mistakes that he has done to learn all this knack and all, right? So there is always, everyone knows about their success stories, which are, let's say, achieved a great milestone or something like that. But there would be a failures also while in the process. So you have to have your strong processes.
And everybody hears only about the success.
Yes. One of the very popular person has said that when he has been asked what are your success stories, everyone will tell their success stories. I would want to tell that there are many failures which are not in public,
Yeah.
right? There are some companies which have gone bust. So in early stage, we used to say it is 80-20, right? 20% of your portfolio will generate return for most of your.
Yeah.
So if you see any of the, let's say, what you can say, SoftBank and all, they have done only 2-3 good investments, and they have covered it for their lifetime, right?
So are there any early indicators to catch them young, these SME companies?
Again, well, I would say that keep your, let's say, if you are a enthu investor, right? Whenever you go to, let's say, for example, any of the retail stores like D-Mart, Big Bazaar, any of them, right? You see smaller companies like, for example, if Nestle or any large D2C brand or consumer brand is coming up, you will not know who is going to be who is manufacturing company behind that. And if you try and track those companies, because when we
read the label carefully,
read the label carefully, how they are doing it, what type of industries are there, and if you do a little bit of research, you will be able to. And you have to, well, obviously, being your nature has to be exploratory to get those ideas, right? So, for example, I was amongst probably the first 100 or 1,000 customers of Snapdeal. Everyone was thinking like, well, now Snapdeal is obviously pivoted their model and no more. But when they were scaling up the coupon system, like you get to, let's say you pay 100 rupees and you get services for 200. Or for that matter, Paytm or Freecharge. The ideas that have come up, right, is from these background only. Like, there's no, if you have to pay your electricity bill, you have to either drop a check in the drop box at any of the railway bridges or over bridges that you see, or to a particular ATMs and all. Now the systems and technologies have helped them. So keep your ears and eyes open. You will get to see these companies coming up. And obviously, if you see and look around, there will be enough and more opportunities that are there.
You've seen so many of these companies, playing out in the market. You've been a participant in the market for so long. Tell us a bit about your story. What has shaped you, your career, your moves that you've made?
So I cleared my CA in November 07 and got exams in November 7, cleared in January 8 and all. So I cleared the CA in those years where BFSI or the financial services was a curse. It was lemon time. So everyone was fired across the financial services. I started my career with mutual fund because I knew that I wanted to be a part of capital markets journey. I don't want to being a chartered accountant. I don't wanted to do the
So you identified
taxation.
That trend early on.
Yeah, taxation and audit. I was negatively sure that I don't want to do audit and taxation. So all my articleship also, I was part of management assurance where we are trying to help management.
Right.
We've always been on the helping side, working with founders, management. So started my career with ABN AMRO Mutual Fund in 2008, spent about year and a half. Then moved to equity capital market side for about 12-13 years. And little bit on the private side with GR Ladha on the early stage ecosystem, where we have been part of investment banking, mergers and acquisition. And then in 2016, I and Priyesh came together and started Cumulative Ventures. Always been helping hand to founders, family offices, micro VC funds. And in 2024, we got our license for merchant banking and started this merchant banking activity.
And what about your life beyond Cumulative? Any interests, passion, hobbies?
Really now I have to start thinking because I have not seen life beyond Cumulative Capital. 24/7, happy to help.
So all work and no play for you?
Yeah, well, obviously hobbies and all are there. Like I am a tech geek, obviously non-technical. I don't do coding, but I would love to understand the technology. I am a movie buff, always quote examples of movie like we should do it like this. So I have set up a culture now. I don't know how long it will sustain because if we are growing.
Any of these movie examples you'd like to give us?
Many. So like in 3 days, every time we have to explain something to client, we have to give demo. Like how things work up, right? And in our, what you can say, organization, when we started with 2-3 member team, currently about 25 member team. So we had a prerequisite to watch Suits and Billions. Suits the Harvest, because we believe that you get to learn always. There's no need to go to court and fight. You should always settle in get the objective done without compromising obviously the legal side of it, but try and find the solution driven approaches. And in terms of scalability, think about billions as to how fast you can scale, how big you can scale.
That's a very interesting way to create a culture
So
inspired by the
yeah.
movies and shows.
So let's say I am a fan of Joker in Batman. So I say that whatever you are good at, no time you should do it for free. And my other partner is also a fan of Batman, but he sees that you should not have fear of anything. But fear is the greatest teacher, but you should not fear. If you want to try new things, you should try and explore. Worst case is you will fail, but your life is not going to end there.
Yeah.
You try again and get a success out of it.
Great. And on that note, we'll wrap it up right here.
Yeah.
Thank you, Swapnilsagar, for joining us, for your deep and practical insights, sharing them all with our viewers today. Thank you once again.
Thank you very much once again for having me on the Markets Pillar Uncovered on the Money TV. Look forward to be a part of again an interesting session.
We look forward to that as well. Thank you.
Yeah. Thank you very much.
That's all for this episode of Market Pillars Uncovered. Don't forget to like, share and subscribe to Money TV for more such conversations with India's most insightful market leaders. Until next time, invest smart and stay informed.